Hi, and welcome back, everyone. My name is Michael LeBlanc, Director and Senior Portfolio Manager at Canaccord Genuity Wealth Management. And thanks for joining us again here this week for Mike on Money, where we're going to talk about what we've seen in the markets last week and this week coming up. And we're also going to take a bit of a dive into cryptocurrencies. I know it's been a hot topic. I've touched on it in the past. I've done previous videos with the recent volatility. We've been getting a lot of questions around, is it a good time to buy? What should you buy? How should you buy it? So I'm going to touch on a lot of those aspects today and hopefully give you some more insight into investing in crypto and also understanding crypto in general. But I did realize after preparing for today's video that it is a much more in-depth process and information. So I'm actually going to do a 5-part series on our YouTube channel around cryptocurrencies, all the, many different types. I won't say all different types because I won't touch into all different types. And then also how to buy them, how they're traded, and things you need to consider about where to buy and sell them. So look for that. We'll send out announcements about those, but I'm going to highlight a lot of it today, just like we covered off SPACs last week and IPOs. We'll give you a good insight into what you need to know before you start going to look at it, or if you already own some or have traded in the past, maybe some things to consider for the future. So with that, as always, everything we talk about here on these the videos and podcasts, keep in mind is for information purposes only. Do not take it as advice or solicitation. Always do your own due diligence or reach out to a professional and get advice as to how this might apply to your situation. You can always reach us at mikeonmoney.com. That's our portal. Do all our other content, but most importantly, to access us, all our contact information is there, and you can even book appointments directly on that site. So if you have any questions, do go there. Happy to answer and any questions you have and help in any way that we can. So let's, always forget, if you are watching live here today, you can always put your questions up. Just click that Q&A button. If you're listening to the podcast, I mentioned, just go to mikeonmoney.com, and same if you're watching a replay of the video, go there and feel free to share these. We're happy to share these with other people if you have friends or family that might be interested in some of the topics we covered. So with that, let's dive into what's going on in the markets coming up. We have the U.S. Chicago Fed National Activity Index for April coming up, and also the financial markets for Canada. In Canada, were closed for Victoria Day holiday, of course, yesterday. So nothing new on those fronts. We did see the stock futures edge up a little bit today, and bond yields creep down as people became a little bit more comfortable with that inflation number. If you remember last week, we had a pretty high inflation number in Canada, spiked up to 3.4%. But that was expected. If you've been following us all along, we were expecting a spike in the short term and then leveling off and hopefully keeping level or below that 3% level into 2022. And of course, the Bank of Canada and the US Fed want it to last into 2023. I think that's a little bit more optimistic than I would be, but that's kind of what we were expecting. So the markets have reacted to that pretty predictably on that front. Sea change in global freight sales out on the coming out of the digital dark ages. So this is actually going to lead into a little bit of what we're talking about around the blockchain and cryptocurrencies. When containers were loaded and shipped from China over across seas, particularly we're looking at a company called MediaShop out of Australia. They never knew quite what got into containers. If there was a shortage of containers and things didn't get loaded, they wouldn't really realize that until it arrived in Australia weeks later. By applying newer technology and actually using a blockchain technology, which we'll talk more about, they can control the supply chain a lot more effectively. They know exactly what goes into which container, whether the container got filled, what's still on the dock, what's on the ship, where that container in that ship is at all times as it crosses the ocean. So they can keep a very close eye on the supply chain, and obviously more effective for inventory to controls and cost controls. So we're seeing a lot of that come through the freight industry, which will mean lower cost for suppliers or for vendors, and also more effective use and distribution of the supply chain around the world. COVID might be shifting the ratings goalpost. So Colombia just recently lost its S&P Global investment grade status as of last week. But that's as usual, when we see something like that happen, it raises the question is who might be next, or who might be affected next, but also whether the number of countries seemingly not being being spared points to movement of these rating goalposts. All kind of has to be reviewed in a much different light given the COVID situation. So, what we would look at 2 years ago as far as the investment grade status versus today, and also the expectation over the next coming months, is all up in question as how the investment grade status is being graded on COVID handling in each country. So some countries obviously doing better, but other ones we have to keep a very close eye on, especially if you're investing in debt in the emerging markets. Always be cautious on debt in emerging markets, because regardless of what the debt is doing, of course, you get the currency swings double hit. But now, of course, you have the COVID outcome as well, could seriously affect the swing of the valuations on that debt purchase. So always be careful with that on the emerging market front, and even more so these days. Oil prices lose a little bit of momentum as funds are cutting the positions. We talked about it last week. The hedge funds started to trim some positions. Funny enough, we trimmed a little bit of our position in the oil as well, just taking some profits off, not necessarily changing our outlook for 2021, just simply taking a little bit of profits off the table, as we did see that initial rally on the expectations of things reopening, and now we're seeing that kind of plateau a little bit. So it's not necessarily a change of the outlook, but just seeing a slower growth from this point going forward. We continue to see portfolio managers trim things off for the second week in a row. Jobs versus inflation trade-off. So this is something we talked about since last year. One of the big things about this recovery, or coming out of this pandemic recovery, economic recovery, is we've got to keep that inflation in check. So we've got to keep inflation low, but have to create jobs. All those jobs that were taken away, we've got to get people back to work. Some of those jobs are not coming back, so creating new jobs in order to bring the unemployment numbers down. But of course, as you bring unemployment numbers down, you're pushing up inflation. So it's this balancing act that the Fed has to juggle constantly. And as we've seen in the early part of 2021, they brought back a lot of jobs, but they pushed up inflation. So now, it's bringing down inflation while not getting rid of jobs, but still trying to keep some momentum there. But probably going to see that level off a little bit as we bring the inflation numbers back down again. So a little bit of back and forth there continues. U.S. pot sellers are stashing cash as the banks are going to leave them high and dry. This is not a bad comment on banks, not picking on them. This is an infrastructure, or a banking infrastructure problem in the United States. Despite 36 states in the US and DC having the legal use of marijuana, as we've talked about, it's not federally legal in the United States, which means banks can't really support cannabis companies. They can't provide them all the same banking services because that would violate the federal anti-money laundering laws. So that leaves a lot of cannabis companies in the United States having to stash cash or look at other alternatives to the traditional banking offerings that companies usually enjoy. So it's another reason around this big push for a federal legalization. Obviously, there's a lot of money in that industry, and to have that in the banking sector where it can be properly monitored, taxed, and audited, and all these other wonderful things. Canada went through the same growing pains. Of course, now it's legal in Canada, so you can have your banking. Cannabis companies can have their normal banking services up here in Canada, but that doesn't exist in the US right now. In the US, the central banks are stepping up the exploration of a digital dollar. So again, leading into our crypto discussion today, and previous crypto discussions that I've led on these videos, talking about the problem. One of the big problems with cryptocurrencies becoming mainstream is the central banks of the countries around the world having a big challenge around regulation, tracking taxation, capital gains, money laundering, a whole host of regulatory issues come up when you talk about cryptocurrencies. So federal banks around the world have been toying and struggling and analyzing, whether that they should come out with their own cryptocurrencies that follow the regulations to compete directly, or to move away from the open source digital platforms that are out there. And this is just coming more and more to the forefront as China puts more regulations around cryptocurrencies. And of course, as we start to see a little bit, I don't want to say mainstream use, but certainly mainstream access and talk about cryptocurrencies in North America. The US is definitely looking at what they could do, or what the potential offering they could put out there for a digital US crypto version of the US dollar. So, and then of course, again, leading into our conversation, cryptocurrencies, if you haven't been following, had a massive sell-off last week, down almost 40% from their highs. They did bounce up a little bit today, which we'll cover a little bit more, but obviously a lot of volatility in that market. And I'm not going to talk about the volatility being caused by Elon Musk's tweet. I mean, that's just a side problem that cryptos have, but it has nothing to do with the core, the core underlying transactions that are happening out there in the cryptos. On the COVID front, Canada doing well, again, continuing, the numbers continuing to improve as far as the vaccine rollout goes. BC's now just moved to 12 plus. Of course, as far as reopenings going, we're seeing some easing in Ontario, seeing some easing in Quebec. And BC, I'm not even going to speculate because we are coming up to our 1 p.m. here right after this. You'll be able to hear the provincial update on what changes they're making after the long weekend, and see what kind of reopening. The only thing I will say, of course, they have all the provinces have clearly telegraphed it's not going to be a switch. It's going to be a gradual reopening. So, I think a lot of people may be hoping for a lot of changes in the announcements this afternoon. I'll be hoping just for some incremental changes with at least a guideline as to what the summer is going to look like. I think everyone's ready to, have a little bit more access to recreational and outdoor stuff. So we'll hear that at 1 o'clock, but the numbers are moving along really nicely. Here in BC, we were at a 16-week between vaccine shots. I believe I read this morning, they've now reduced that, or they will be reducing that to a 50-day. So it's a bit of a shortening of that time period, and rumors that it might even go shorter. And that 50 days on the Pfizer, obviously it may be different with Moderna and AstraZeneca, just simply on availability of the vaccines. So all good on that front, and hopefully we all get some good news today as far as updates go on reopenings. So let's take a look at the markets. As I mentioned, the conference board in the US is expected to show consumer confidence index fell a bit after jumping up in April. But again, these numbers, when we say fall from previous months, we're going to hear that a lot in the numbers, and we have started to hear it a lot in May, and I'm certain we'll hear it in June again, so especially around the housing numbers and things like that. That's just fallen from their high. So that doesn't mean fallen from good levels. It's just that peak. It's just the growth is peaking out a little bit. It's still growing. It's just peaking out a little bit, and not a big surprise that we see that. There was a big surge as things reopened, especially in the United States, and then that's just leveling off a little bit as things slightly kind of return to normal. We're not there yet, obviously, but as things kind of go to normal economic growth levels. So when we see those numbers fall, say and fell, really got to look that into context and say, well, how much and what's the trend though? Is the trend still up? And that's positive. Month to month, there's always going to be some movement. The Federal Reserve Bank in Chicago, they're getting together to really look at supervision and regulation rules. This is, which leads into my last point there. Wall Street bank executives are expected to talk about their institutional roles that they played to help the economy rebound after COVID or after the pandemic, or kind of during the pandemic. And this is just the back and forth between the Fed Reserve and Wall Street around regulations. We saw after 2008, we saw a lot of tightening of regulations, and then under the previous U.S. administration, we saw some loosening of those regulations, and now the discussions is where should they end up? Should they stay where they are? Should they tighten a little bit again? There's going to be a lot of back and forth here with the new government in the United States. Not a big surprise there. We also see a little bit more mergers in the oil and gas sector. A little bit surprising. We saw Cabot Oil and Gas and Slimerix to create a new firm, a $17 billion merger. And while we say surprising, it's just a little bit late in the oil pricing game. I mean, again, if you've been following us for the last year, we saw a lot of M&A in the oil and gas sector last year when the prices were really low, taking advantage of those lower prices. A lot less now. We're still seeing some. Obviously, this one was a little bit out of the blue for the market, but not necessarily negative, but paying a bit of a premium on the asset side of things here. But hopefully we'll see more details of this as it plays out. Big banks are looking for post-pandemic rebound on their credit card revenue. So no, it's surprising. People got a little bit more conservative around their spending through the pandemic. A little bit worried about the future. So credit card spending and balances were reduced. Remember, the banks make their money on you carrying a balance, not on necessarily using your credit card. The credit card companies like Visa and MasterCard, they make their money off every time you transact the card. But the banks make most of their money off you carrying a balance. So the best client for a bank is someone who carries a balance on the credit card. If you're paying your credit card off every month, you're not a good credit card client for banks anyway. So you're not their favorite when it comes to revenues. But a lot of people paid down their credit card balances, obviously around concerns of the future through the pandemic. And now banks are kind of turning their sights on people getting out there, using the credit cards again, and keeping the revenues flowing. Pfizer's began testing the use of the COVID-19 booster shot with the pneumococcal vaccine alongside it. So especially for those over 65, of course, getting that, the vaccine every year is really important. So now they're starting to, much like we see in kids taking the mRNA vaccines, sorry, not mRNA vaccines, the rubella, they have their combined vaccines. I should know. That's how old my kids are getting. I can't remember what that vaccine's called. Anyway, it's the rubella one that has the combined vaccines in it. They're looking at combining it just to make it easier for people to get their annual COVID-19 boosters, but also get their pneumococcal vaccine at the same time. And we'll probably see more and more of that, little bit at a time as they test to see, is it safe, what the doses look like, and make sure it's something that we can do moving forward. But obviously, if it is safe and they can do it, and they can keep the doses of each low enough in a vaccine that you can get a combination one that makes it easier for everybody. Russia, is giving Google only 24 hours to delete the banned content. So we've seen this in China as well. We see in Russia, there's certain contents that they don't want out there. There's a lot of different laws in Russia, obviously around LGBTQ, and also speaking against the government. There's a lot of content that is not allowed with through the Russian government. And Google has been given 24 hours to get it all down, or they'll shut down the website. And we've seen China do that in the past. So I won't be surprised if they follow through. So I'm sure Google's working hard on that one. Exxon's working to add a couple of new directors to the board, made a bitter proxy fight. So this is just their annual proxy vote, looking at the direction that the energy industry and around the climate experience for the next 12 months. There's been some back and forth over the last year as to where they want to take things. And obviously it's the shareholders that are, can push the company through their vote and through their proxies to drive the oil company's climate stance and their board makeup. So as this happens, they're looking at a couple of new directors to the board to provide for what the shareholders are asking for. Coming up in Canada, retail sales have been plunging again. Strong word, plunging in April as restrictions tighten. It has pulled back. Obviously, Canada did have some pretty serious shutdowns. In BC, we've been lucky compared to the rest of the country. As far as the closures go, we did have more restrictions come into place, but Ontario and Quebec, the bigger provinces, obviously had much stricter COVID shutdowns. And that, of course, have affected some retail sales. But as they both reopen, I don't expect those numbers to last into the summer. Enbridge has got together with Fluxies and EIG, which is a private US equity firm, to put in a bid for Brazil's top natural gas import pipeline. So this is a bit of the global pipeline battle again, taking the commodities aside, but a lot of talk around pipelines, of course, expansions, and more companies trying to get more inventory movements through the pipelines that they have. So they're making a move for Brazil's top natural gas line. And of course, the Kansas City Southern Railway, the fight continues. So if you haven't followed this, I've talked about it a little bit, just a brief recap. CP Rail had a really solid bid to buy Kansas City Southern, which was actually going to create one of the longest railways from Canada all the way down through Mexico under one kind of a company. It was well liked by the trust boards that oversee the railways. It was well received by both shareholders, and it made a lot of sense. CP was going to grow, but they'd still, as far as competition goes, it was going to be very accretive to both companies' growth without really blocking any kind of competition rules or fair competition. And then CN stepped in with their higher bid for it and kind of threw things off the rails a little bit. And KC Southern has decided that they want the higher bid from CN. CP said that they weren't going to raise the bid by about $4 billion. Which is a bit of a complication because CN actually does create some competition problems because there is a lot of overlap between those two railways. It's also, it doesn't really add accretive growth to both, some accretive growth overall, obviously, but not really to both. CN also has to pay an extra $1 billion. They have to pay a breakup fee to CP of about $700 billion, and they have to also create a separate trust for the railway to exist in while the antitrust boards review whether this deal is good for consumers. And it could be blocked at some point. There's no certainty around that. So they could spend $1 billion and still not get the railway. So there was a lot of pushback by a lot of different groups, including shareholders on both sides, to for KC to accept the CP bid, even though it was lower. But that's not how things worked out. They've accepted the CN, so now we start that process of setting up the trust and paying the breakup fee. So we'll watch that play out. I don't think it's negative for either railways in the long run, but it certainly would have been a lot more accretive for CP had they won. On the dollar front, we saw the US dollar slip a little bit further, continue its drag, just as we see optimism in the market, we see weakness in the dollar, so that trend continues. As I mentioned, cryptocurrency, we saw a lot of volatility, traded on the weekend, traded around 36,750 US. Bounced up this morning, I think just over 40,000 again. But a lot of volatility. In fact, last week, I think we saw it dip down and almost hit 30,000. So a lot of movements in the last week around the cryptocurrencies, especially Bitcoin, which is the prime one that everyone tends to follow. As I mentioned, the bond market dropped a little bit. On the commodity front, as we talked about, oil rose a little bit on inflation fears, but wheat off its highs of $70 down to about 66. Just as some of that profit taking comes out, still some predictions it could hit $80 a barrel this summer as the vaccine rollout continues at the current pace. So let's dive into cryptocurrencies. And I know some of you are probably more educated than others on this, and have more insight. But I'm going to try to bring everyone up to kind of speed and cover off some of the basics, but then get into a bit more detail. So let's start by talking about the blockchain or cryptocurrencies and what they are. So cryptocurrencies, as we know, is just a digital currency. So it's a digital dollar, but it trades or it exists on the blockchain. And what the blockchain is in its simplest terms, if you think about a bank, traditional bank is what we call a centralized system. So if anyone wants access to their money or anyone wants access to the bank, we all go to the bank, right? So there's all these individual lines pointing to a central location. So that's where everything's held. That's where all the transactions are tracked. And that's where all the ledgers are maintained, or all the the transactions are maintained basically at the central position. And the challenge that the blockchain brings to this is, of course, that one central location is easy to attack. So think about Fort Knox. If everything's in Fort Knox and you can manage, it might not be easy to get into Fort Knox, but it's easy to say, I'm going to put all my efforts and knowledge into trying to get into Fort Knox. It's one location. If I manage to get in there, I get access to what's in there. And that's kind of the risk of this centralized location. There's another way to look at kind of digital diversity, is decentralized approach. And you can think about that as social media. So if you're on social media, say Facebook or Instagram, you're linked into that social media account into a centralized location, but then you're linked to all your friends out that. So, there's all these branches around, but all through all those branches, they all lead back to a centralized location. So that's where you get, the risk of being able to find your way in through one of those channels and still lead back to the centralized location. The way blockchain works, it's what we call a distributed network. So think about it as nodes. So no centralized location. Nodes exist all around the world, and each node is made up of multiple computers and systems or clouds around the world. And every time a transaction happens, so every time someone goes out to buy a cryptocurrency or to buy, say, Bitcoin, that transaction is sent out to all those nodes and then again divided amongst them, all those little computers, and through and they're blocked up with other transactions, not just your transaction. And as that transaction is being ledgered, it's being ledgered across all those nodes and all those different all the nodes. Sorry, the block is divided across all the nodes and all the computer systems within those nodes into tiny little bits. And each one will record that final transaction across all those areas. So if you think about how it is processed, in order to hack into that, you would have to attack every single node and every single computer simultaneously, hack into it and override that transaction ledger in order to kind of hack or get access to that or manipulate that. So it's pretty difficult to hack into, making it a very secure platform. Now that's what makes the blockchain very powerful. Now there's two different types of blockchain. There's a private blockchain, and that actually is that shipping container example I gave earlier. They're using a private blockchain, so it's not open to everybody. It's not open access to the public. It's closed, and they can track those containers. They can track those ships. You know, anyone who is granted access to that blockchain, and they can update that across all those nodes and across all the systems, and keep a very accurate approach to that. On the public side, and that's where your cryptos take place, this is where the public can have access to it, so you can go buy and sell through it. And it is open to, you know, why you have so many different cryptocurrencies. It's wide open and it's spread around. But if you think about the crypto market on the blockchain, currently of the size of that, which is over $2 trillion, I think right now, give or take, don't quote me on that, and it's constantly moving. About 50% of that is Bitcoin. And Ethereum is another big one we're going to talk about today, is about 20%. So that's what makes cryptocurrencies attractive. It's distributed, it's global, it's not attached to anything, it's very secure, and it's very quick to do a transaction. So let's talk about Bitcoin in particular, and then we'll break it down a little bit more, since Bitcoin is the largest and most popular. It was also the very first cryptocurrency. It popped up back in 2008. It came out along with a white paper that was written by Satoshi Nakamoto. Now, no one knows if that's an individual or a group. No one took credit for it. But this white paper basically outlined the basics of the concept of cryptocurrency. And this is what Bitcoin was basically based on. And the idea was going to be, you know, when it first came out, was that Bitcoin was going to be money. It was going to be just like money. It was going to be used as currency, just like any other fiat currency. So fiat currency, the Canadian dollar, the US dollar, fiat currencies. And that's kind of what the original premise was. And if you think about a currency, what traits does it have to have? Well, you know, ideally it's scarce, so it has value, that it's durable, you know, it doesn't go away. It's divisible, right? Because every transaction is going to be different amounts. It's recognizable. People have to, you know, it has to be accepted at where you want to do this transaction. Fungible and transportable. And we've seen currencies throughout history. Before we got to the dollars, there's a lot of things that were used for currency, and even gold sometimes is considered a currency. But gold faces a lot of challenges when you look at those qualities. You know, it's not easily divisible. It's not transportable. You know, there's a lot of problems around gold, which is why gold really never took off as a main currency in modern society. Now, Bitcoin, it fits a lot of those categories, but, you know, not perfectly. That being said, neither do the fiat currencies. I mean, if you think about the scarcity factor, one of the big challenges we have, certainly over this last year and probably for the next coming years, is the amount of money being printed by you know, countries like Canada and the US, you know, making it less and less scarce, right? So it's not a controlled scarcity. So you know, even our fiat currencies don't fit perfectly in all those categories. So you know, Bitcoin fit a lot, but one of the big challenges it had, it is, if you think about that distributed network, it is a very costly process to run that through all those systems. And if we dove into the blockchain side of things, you know, we can dive into the power use and environmental impact and cool it, so many different layers, which we will in our 5-part series. But today, just understand it's a very expensive to do a Bitcoin transaction. So it became unfeasible to handle small transactions. So as a day-to-day currency, very unlikely. So keep that in mind when you're investing in Bitcoin. It will very likely never really become a day-to-day currency. Well, let's move past that for a second and talk about mining of crypto, specifically Bitcoin. So mining is the basically something what they call proof of work. So every one of those transactions I mentioned that happen, it gets pooled and put into blocks and sent out to the nodes, and then from the nodes into individual computers, which are doing these very intensive mathematical calculations in order to create the ledger and have proof that that transaction happened. Now, if your computer is one of the ones being used, or if you're a mining farm out there that's actually providing proof of work of one of those transactions or many of those transactions, you get paid in crypto. Now, the amount that's being paid out is actually on the declining scale as time goes on. In fact, it's averaging just over 4 years that it drops. So, if you go back in 2008, every block that was sent out, the computers that took part would share 50 Bitcoin, would be divided up amongst the computers that transacted that block. Now it's about 6.25. So, much, much smaller, because there's hundreds and thousands of computers in each block. So, your piece of that Bitcoin is very limited. Now, also the Bitcoin structure is that there is a lifetime maximum number of Bitcoin that can be created, and it's 21 million. We're currently sitting around 18.7 million. And by 2041, there'll be no new Bitcoin at the current rate of decline of mining payments. By 2040, there'll be no new Bitcoin being created. So that means when we talk about that scarcity factor, Bitcoin fits into that really nicely, because we know exactly how big that market is, and we can monitor exactly how quickly that total volume is growing by. So we can understand the supply side of things. Demand's another thing, but supply side's there. So that takes, but it takes this time and cost. It doesn't work for all those small transactions. But what it does work for, and if you are investing into Bitcoin specifically as a crypto, keep in mind what you're buying is a stored value currency. So much like gold, right? Gold is not, the world supply of gold is not out there being mined because there's a day-to-day economic use for it. It's not like silver, it's not like aluminum, it's not like other resources like oil, where we say we're going to go mine that or drill for that, and then we have this use for it. It's actually being used. Gold is a stored value investment. And if you think about it, we've had more gold that's needed for any industrial use. There is some industrial uses, but not the amount of gold we have for decades and decades, since it's stopped being a back for the currencies. But it's still maintained its value between 1,000 and 2,000, for the better part of the last decade, regardless of that. And that's what we're seeing in Bitcoin. It's a stored value currency. Now, there is a lot of volatility around it, and we'll get a bit more into that. But a lot of that's being just driven by how it's traded and who's buying it. So where's this demand coming from? So who's buying it? Well, there's kind of 3 categories. There's corporations. So there's some corporations that are using it to store value within, the retained earnings. So that'd be like Tesla has come out and talked about that they had, at one point anyway, 1.5 billion in Bitcoin, and also a company called MicroStrategy. They are using that as the main reserve for their retained earnings within the company. So there's one aspect of buying it and storing the Bitcoin and a retained earnings strategy. We also see institutional money managers. The biggest probably in the United States is an institutional money manager called Grayscale. They're about $40 billion in Bitcoin that they have in stored value in their investments. And their goal there is ride it as it gains in value based on this limited supply. And then, of course, we have the more recent one that's much more active is retail. So this is, companies like PayPal, you can go buy it on. There's also different apps you can buy. And of course, there's exchange traded funds out there you can go buy and buy and sell it, if you will, in your portfolios and get access to it through those channels. And as people, more and more retail investors put money into those, it's eaten up some of that supply, right? So more demand coming into the market. And that's where a lot of the volatility we've seen over the last little while is from that retail. Retail tends not to be as long viewed as institutional corporations. So, they all rush in at once. There's a big demand drive, driving up the price. And then when there's weakness, they tend to be much more emotional and get scared and sell off, driving down the price, and are also very swayed apparently by what Elon Musk will tweet out day to day. So keep that in mind when you talk about volatility. So that's Bitcoin in a nutshell. Now I'm going to move over to Ethereum. So Ethereum is another kind of cryptocurrency. And this came out in 2015. It's based on a smart contract technology. So it uses blockchain just like Bitcoin. The difference is Ethereum was built to follow a pre-programmed rules. So the easiest way to explain that, if you think about putting money into escrow, so you buy Ethereum, you put it into escrow, and when the condition of that escrow happens, Ethereum will automatically release those funds. So no one has to go in, no block or blockchain or nodes have to be involved. The conditions were met, it moves on. So it makes it very useful, especially when you talk about day-to-day banking situations where there are a lot of banking functions that are rules-based. Put it here until this happens. Once that happens, move on to the next, and then the next, and the next, and the next. That's called decentralized finance, or DeFi. And so DeFi technology is where Ethereum kind of fits in, where it will pick up more and more use. Now, until 2020, from 2015, there wasn't a lot of growth around that, which is probably why you've not heard as much of Ethereum when you talk about cryptocurrencies. But since 2020, since the pandemic and more move to e-commerce and online, we've seen a big spike in systems and apps and providers using DeFi technology and specifically Ethereum for those transactions. So that's where you've seen this spike in growth in Ethereum as far as cryptocurrencies and in its value. If you look at a graph of Ethereum, we've seen a big spike in growth in it since 2020. And a lot around it's becoming more popular to be used for this DeFi or smart contracting technology in the banking sector. So just as an example, when you go to invest into cryptocurrencies, don't think of them as all the same. Just like if you're going to invest into a car or into stocks, Royal Bank is not the same as going buying TELUS. They're two different industries, they're two different companies. Really understand why you're buying it. Are you buying for the qualities of Bitcoin, or are you buying it for the transaction ability of Ethereum and growth of that side? Maybe you want to look at that. And that would be true of any cryptocurrency out there. And Ethereum actually is being used for over $40 billion of transactions these days, just based on that technology. Now, there are a lot of other coins out there. I'm not going to get into them. I will talk about stable coins. So it's another class of coins. So stable coins are very different. So they're also crypto. They also trade on the blockchain, but they're pegged to a fiat currency, say the US dollar. So there's no volatility in their pricing other than their underlying pegged currency. There's about $30 billion in the stable currencies out there. And where this is being used more and more is for businesses making payments to international, for international contracts or international companies. So you think about it, if a company wanted to pay a supplier in Germany from Canada, it takes days, even weeks, to kind of get that transaction through the traditional banking system because of the international rules. But going out and buying a stable coin and then transacting it immediately across the blockchain, it happens in a day, and it makes it a lot easier. So again, much easier to transact, less volatility in the pricing. Obviously, the growth in these coins are going to be really by amount of people that are using them, and more people using them. I said they're roughly 30 billion currently being used out there today. So let's move away from the coins themselves, because again, I can dive in for forever on that topic. And let's move over to access. So as I mentioned before, you can absolutely go buy cryptocurrencies. There's a few ways to do that. You can, as I mentioned, PayPal allows you to do it. There's markets, public apps and sites you can do it, like Coinbase is a large one. You can have a private key. So you've probably heard this, or where someone's put it on a USB drive, put a private encryption key on it, and then lost or forgotten the encryption key and can't access it, or lost the drive and it's gone. But those are kind of direct ways you can go buy the currencies yourself and hold them. There's a lot out there. Do your own research. Of the ones I've just named, I'm not endorsing any of them. Do some due diligence around the ones. There have been, we've all heard the story of the CEO who went missing or presumed dead, and no one knew the password to get into the wallets for anybody, and all that crypto was lost, and then later found out it wasn't there in the first place. Anyway, do your due diligence, so be cautious on those, but you can do that direct purchase. Closed-end funds. So closed-end funds came out early before regulators really allowed them to be what we call open-ended funds, or ETFs. But they trade kind of like stocks. And Grayscale, I mentioned, was the biggest in the US. And then Canada, 3IQ was one of the early forefronts with their closed-end funds that you can go buy those, and they're still available today. You can invest directly in companies that invest in Bitcoin. I mentioned MicroStrategy, which is mainly a software company, but again, all their retained earnings are in Bitcoin. So they do fluctuate a lot. Their stock fluctuates on the value of Bitcoin. And another one, Silvergate, which is basically a bank for cryptocurrency exchanges. So a lot of people will invest in those equities and taking advantage of the growth of that market. Or as I mentioned, there are ETFs out there. In Canada, we have Evolve, CI, and Purpose, all of probably the bigger ones so far. There's going to be more that have Bitcoin or cryptocurrency ETFs you can go buy into your portfolios, into your RSPs, into your TFSAs, and invest into it. Now, that being said, those are the ways you can access it. Now, here's a bit of risk. I've talked about the volatility, but just to define the volatility, Bitcoin has had, even in the last year, a plus 42% day and a minus 42% day. And a lot of that volatility can happen within an hour. Now, here's your challenge, depending on how you want to buy this, is Bitcoins and cryptocurrencies trade on a 24/7 market globally. So that means any time of day, any day of the week, it can be moving by that 42 or higher. I mean, that's just what we've seen in the last year. And it's affected by all kinds of things. I've mentioned and kind of kidded about the Elon Musk tweets, but it can be based on something that happens overseas in a different market in different times. So, I mean, just recently, I think it was a 37% move at 12:42 a.m. on the Bitcoin price. So if you can imagine, if you trade in an ETF as an example, or in a closed-end fund or those equities, you could wake up in the morning and go to look at your ETF value and see that it's moved by 30, 40% or more down or up, you never know, overnight or over the weekend. But the thing is, you can't react to those price and changes. So, because the markets are closed, right? I mean, even if I bought you an ETF in your portfolio and I knew that it was going to be bad or something bad was happening overnight, I couldn't do anything until market open when that ETF starts trading. So you wouldn't have access to that to react to that volatility. So a lot of people favor to use the direct purchase routes because you do have your finger on the pulse 24/7. However, that means you have to kind of have your finger on the pulse 24/7, and that's a lot of concern. As I mentioned, it was 12:42, I think it was in the morning, that we saw that big 30% move just recently in Bitcoin. And if you weren't awake, you missed that, right? Whether an opportunity to buy or an opportunity to sell, you would have missed that opportunity. You would have slept through it. So that's kind of the risk of the volatility around these cryptos, especially if you're taking a more speculative approach to it, which is always dangerous. But make sure if you are buying in these digital assets that you have a high risk tolerances, because they are going to move. It's a new sector of the market. It's a new thing. There's a lot of unprovenness around it, and that's taken out that regulatory uncertainty that I've talked about in the past, right? There's a lot of regulatory uncertainty that has overweighted this whole area that could change on a dime. If we've seen China do it, not a surprise. But if the U.S. were to make a move, or Europe, EU were to make a move, you could have massive ripples through these markets, positively or negatively, depending on what direction that they take things. So do be cautious. Have a high risk tolerance. As I've talked to many of you, this is why I don't recommend the portfolios right now, because of that volatility, because of all those extra risks. And but what I want to do today is really just highlight kind of what the technologies are, what you're investing into, and that there are different types, and make sure that whatever reason you're investing into, if you choose to, that you pick the right one for the type of investment that you want to see happen in your portfolio. So with that, I'm not going to bore you any longer. Like I said, I'm going to do a 5-part series that's going to take a much deeper dive into all these things. If you're interested in that, come follow our links. Go to mikeonmoney.com. If there's anything I didn't answer and you'd love to get more information on, again, reach out to us. Happy to answer those. And if you have anyone that's interested in cryptocurrencies or want to learn more about them, send our way. We'll try to help them out as best we can. So with that, all the best to you. Enjoy this week. We'll talk again next week. Bye now.